Welcome back to Brews Business. I'm your host, Braden Cruz, streaming live here at the Blue Studio. Woo! Now, before we jump into today's episode, Harley over here can't wait to get started.
What's up?
Pumped.
Yeah, we've been talking for like 30 minutes.
In.
Yeah,
just off air.
But we have a sponsor of the Brews Business Podcast, if you didn't know, proudly sponsored by G.I. Love Joe Coffee Company, a woman and veteran-owned business right here in Tulsa, Oklahoma. G.I. Love Joe offers multiple coffee blends, each meticulously crafted to suit different taste profiles and roast levels. So whether you prefer a light and vibrant Bugle Boy, the all-day companion Old Glory, the pour-over favorite Haile to the Chief, or a strong and robust Bombs Away, there's a blend for every coffee lover. Support local and enjoy the brew that fuels our podcast. Check out J. Love Joe Coffee Company, and remember, every sip is a salute to our soldiers. In today's episode of the Brews Business Podcast, we're excited to welcome Harley. God, how do you say your last name again? Liechty. Say it again. Liechty.
It was all wrong.
It was all wrong. Dang.
Liechty.
Liechty. That's such a cool last name. We got to find out where that's from.
Thank you.
Founder and the CEO of Get Better Bookkeeping. Harley brings a wealth of experience in business consulting and financial management, having worked with one of America's leading small business coaching firms, Redmond Growth Consulting. What is going on, Harley? Welcome to Blue Studio and to the Brews Business Podcast.
What's going on, fellas? Glad to be here. Huge fan of the podcast. It's been a busy week, but just like for every good small business owner, entrepreneur, every day is always busy with stuff. But there's a lot of good, and got to be thankful for where the business has been for just 8 months of being in business. So it's pretty sweet. Yeah.
So I got to ask, what was the most impactful part of your week?
Impactful part of my week. Well, I got to remember everything that happened during the week. Impactful. We closed someone, which is great. Having phone interviews with a bunch of people to be potential new employees of the company. Impactful.
Mine was like impactful in a sense of non-business. Like I got to spend some extra time with my daughter.
That's
that
what
was
I was going to say.
impactful. That was some good stuff.
That's probably a good, wholesome answer. Yeah.
Yeah.
I spent time with my kids. Yeah.
Yeah.
My wife still loves me. That's a good one.
That's a good I'm still in business.
Sorry, honey, didn't
Right.
think of that first.
Right.
I don't know. It's just been a really busy week, and I don't know. I get confirmation just about every week or every month that what we're doing is remarkable in the space of bookkeeping. That's a guy. I talked to a software developer company that we could integrate in our company.
Oh, nice.
And it's one that's with bookkeepers and accountants specifically that they work with. And I was talking about our growth and what we're doing. He's like, dude, you guys are really impressive right now. Like, there's a ton of people that are like, he explained it like a triangle in the bookkeeping industry. And you're already a mid-level player with where you're at, which
Nice.
is just continues to be surprising to me because I don't feel like I'm a genius. But to just hear comments about that compared to other bookkeeping firms, it's just like, you got to feel good about how things are going with that. So,
Right.
Yeah.
Right.
So
Awesome.
how's the landscaping business?
Man, landscaping is in transition period, as it always is about this time of year. School starts, everybody stops worrying about their yard
Sure.
because the kids aren't enjoying it anymore, and neither are they.
Okay.
And we start transitioning to everybody worrying about Christmas.
Mhm.
So we're in that transition period. So honestly, just like you, we're crazy busy. We're ramping up Christmas lights, ramping up
Okay.
overseeding.
Yeah, I was wondering if you did the Christmas lights.
yeah.
Because a lot
So-
of guys aren't willing to do that.
Yeah, we hired the right people because
Yeah.
I don't get on roofs.
Do you store the lights
Yeah, we do the whole shebang.
at the shop?
Yeah.
Oh, okay.
Yeah.
Oh,
We,
for the people?
Yeah.
So typically,
that's
anytime
great.
you offer the Christmas light installation service,
Yeah.
whoever does that typically will store your lights for you.
They call
Okay.
it
Yeah.
so you have your purchase price,
Yeah.
and then you have what you call your IRS, right? Keeps on coming back for you. Your install, removal, and storage. So that is included in your Christmas lights.
Yeah.
So we do that whole shebang. But basically, it's just like I said, transition period. You're kind of busy trying to remember everything from last winter time and kind of going through your processes again. Oh yeah, these are the people that for sure. These are the people that things that I got to get ready for.
That makes total sense to store it too.
Yeah.
Because if they wanted to leave you, for instance.
Right.
They got to have the awkward conversation of,
exactly.
can I get my lights back?
That's 100%
You know?
right. It's awkward
which is
conversation.
weird. Yeah.
Well, and it's awkward for them. For
Right.
me, I mean, I could care less. We'll just drop them off. That's fine. But it's actually not I don't know if people have done it. I've only seen one customer do it to us where they said they were moving, so they wanted to take their lights with them. So these lights are 100% customizable,
reason.
right?
Yeah.
Legitimate reason. Except I saw those same lights put up on that same house next year, the following year. So I don't know if he was just like, hey, I'm going to find, and it's fine, whatever. But it is a weird, conversation. But as business owners, it's a smart thing to do, right? Try to keep them hooked in to where you can. They at least have to think about, do they really want to drop you?
Totally smart to think about how sticky you can be with your clients.
That's right. Yep.
This is why.
Because, they will forget about you.
Oh, yeah.
Sad to say, you could do an excellent job and they could fall in love with you from whatever you did. But 6 months or 8 months or 12 months down the road, they'd just be like, well, I don't remember who built my website, or I don't remember who installed the plant, or who balanced my books 1 month, or I don't know, whatever it is, right? Like, they'll forget. So, like, how can you, like, stay
Well, this is why I got trained about the acronym TOMA, to top of mind awareness. Mm-hmm. So that's more so with like marketing and remarketing to people.
Tofu, mofu, and bofu.
Sure.
Top of funnel, middle funnel, and bottom of funnel.
There you go. Okay. Yeah, marketing guy here with all the acronyms. But yeah, so like with us, with the bookkeeping work, a lot of bookkeepers are not willing to, or don't want to, accounting firms manage payroll for people. But we're willing to do that, where we manage payroll, and whenever we use like processors for doing payroll, so like Gusto or ADP, different stuff like that, and we'll actually have it where that company charges us, the company, for that, and then the client just pays one monthly fee from us. Mm-hmm. So instead of them basically getting payments from all these different companies and vendors, they just know they got one cost with us as their finance resource, and then we have to deal with all the costs from all the vendors, which makes us stickier. Because if you leave, you're leaving also with, finding someone for the books, but you got to take the payroll and you got to take the other things,
And the 941s and the insurances and all that.
All that good stuff.
Absolutely. Absolutely. And that just goes down to, like you said, kind of just being sticky top of mind. I know Braden's great about that. Mm-hmm. He's a very sticky boy.
Well, in what?
Well, his whole team, his whole team is really great about staying on top of you and keeping you moving.
Yeah, and I don't know how I would necessarily say that where that foundation or whatever comes from, but like, and what we do, we have retainers, right? Mm-hmm. Like you're familiar with that too.
Yes.
Maybe you are to some degree, but you have more project work than you do retainer work. Kind of like with us, you're paying us every month. We're going to do X, Y, and Z, right? And if I can't do Y, then I'm going to call you or text you or email you and say, hey, I can't do Y, I need help. Hey, I can't do Y, I need help. Or, hey, get ready for next month because we're going to need to do Z this time, or whatever it is, So, but yeah, it's like, and it's actually paid off that the fact that we've like been so sticky is because there's been so many clients that have said, balls in my court. You have a bad client. You guys are doing great. I'm sorry, it's my fault. Like a lot of this, and I tell my team, I'm like, hey, it's really good that you guys are staying on top of it because they feel like that you are doing your job by making sure that they're top of mind. It's also good customer service. And I'm like, they're paying us to do a job. I need to make sure you fulfill that job. And if you can't fulfill that job, and let's just say that we never contacted you to shoot video since May.
Yeah.
You would be like, what am I paying you guys for?
Yeah.
But the fact that Devin is calling you, emailing you, texting you, whatever, and says, hey, we need to do video. Hey, we need to do video. Hey, we need to do this. You're
Every
like,
week.
oh God.
Absolutely.
You then, even though maybe you haven't had a video for 3 months, you're not feeling like the value is missing just yet.
Right.
Because you're like, oh yeah, I need to do that. Yeah, I need to do that. Yeah. Like you're looking forward to it, I guess. It's a different mind perspective. I don't know how to exactly describe it, but.
Well, and
this is more of the topics of more business management stuff is what we're on now.
There's an art to that too. Because like in the coaching business, what we run into a lot is folks sign up for coaching and they want to improve their business. And we're delivering on what we promise to people, but they're not showing up to meetings. They're not implementing action items. And so there's an art to this follow-up and getting people to take action. Because if you just pester, then they see you as annoying. And they're like, God, yeah, I'm just going to cancel. I'm not using this,
Oh, yeah, and that's the other part of that.
So there's an art to being able to contact them, finally get a hold of them, and then almost, make it as easy as possible for them to take action. And then they continue to see the value, even if it is really minimal, So Anyways,
That's well worded.
good job, us.
Yeah, absolutely. And I want to say, if I'm not mistaken, obviously you mentioned we were talking 30 minutes or so before the podcast started.
Right.
But that's the same approach you take in your business. Is that correct? Being on top of people and not waiting till you mentioned earlier, a lot of times there's business owners who were in September, September 8th,
Yeah.
and their bookkeepers are just now catching up on June, July.
Mm-hmm.
So that's a similar idea, but it sounds like you're taking your business in a different approach of trying to be on top of people, trying to stay on top of, and frankly, that's one of the things I love about Braden's team because, as I mentioned, we're all human. And any human that's ever run a business understands there's a million things you have to do.
Oh, yeah.
And you still only have 24 hours a day.
Mm-hmm.
And I love that Braden's team is constantly on top of me, constantly holding me accountable.
Yeah.
Because the reality is that's their business.
Mm-hmm.
That's not my business, but I hired them for a reason. So tell me a little bit more about how you guys take that approach and what that really, you said there's an art to it. Let's hear, how you guys look at that.
Okay. Well, wait, do you want to take it to like how, because there's kind of like a motivation of how I got into it,
Mm-hmm.
or do you want to talk about like how I practically keep up with my clients?
Sure.
Let's
start from the beginning. Okay. Let's start back. So I am not from Tulsa, grew up in Dallas area.
Okay.
And moved up here to go to Oral Roberts. And
so did Maria went there too.
Oh, nice.
She graduated from RU.
Awesome. Good school. But at the end of it, I didn't have anything that I didn't have some job there for me. So I stuck it out here, waited for 2 months on couches, found some job. It's a horrible fit. I was working from my apartment all day, every day, making cold calls for people to participate in paid surveys. It's just like, why am I doing this? And it's also me, myself, and I need people to interact with to keep my sanity. So 3-4 months into it, I just feel like a speck in the world. Like, what am I doing here? Just feeling like a lazy ass. So, but there's a buddy of mine who worked part-time for this company here in Tulsa called Redmond Growth Consulting. And he came over, saw how depressed I was, and was was telling me about his work and what these people do as business coaches. And I never really heard of this as a profession or anything. You don't get told about this in college. So I'm like, wow, this sounds way more interesting than what I'm doing right now. Can you get me in the door? And so thankfully, the interviews were, there was a kind of funny story with that, but I got 2 or 3 interviews and they let me on the team. And basically, there's a lot of development that happened in that 5 years, but I worked at a business coaching company where basically any growth issues small businesses had, we dealt with. Sales, marketing, hiring, operations, anything and everything. We even looked at the finances for some folks. And this is where the motivation came for Get Better Bookkeeping. Because over the coaching relationship, I would want to sit down with a business owner and say, hey, let's look at your profit and loss. Let's look at your finances and how well are things going right now? And they say to me, oh, well, bank account's a little low, or, we got a lot of people that owe me. I'm not super busy. These are all vague answers, feelings, So I'm like, well, it's September 8th when we record this podcast. So do you know how well you did in August? Do we have finances for that? And they're like, no, actually the bookkeeper I hired, they're actually still working on July. And this answer kept happening. So I'm like, so all these business owners, they don't have any idea about how well things are really going right now, which is just alarming, especially because half these people we worked with had some kind of bookkeeper, even if it was their wife or sister or something doing the books. Someone was doing it, but it wasn't to a level where it could actually help them in their business. So I'm like, this idea is eating at me over the years. And being a business coach, I always kind of knew this wasn't something I wanted to do forever. It was a great job, great profession, but I'm like, I don't want to be business coach Harley. I don't want to this is not who I want to be. And even though I made good money, I also wanted to get to crazy goals, to where I could help provide for my kids for college or help support their first house, whatever those things are. So I had to make more, and kind of the decisions in my brain were, well, do I go to school, become like a lawyer, a doctor or something? That's not me, and that's a ton of debt. I don't want to do that. And then I was like, well, I could be a hotshot sales guy, but I have the skills and talent to do that, but that's also like not my character trait. I'm not someone that like gets after the hunt for the sale or whatever. And so over this time, though, I realized, wow, I guess I've been trained, whether I like it or not, to start and run a business. Because I'd seen success stories of guys going from one-man shows to multi-truck teams in a year or two. Or like flooring guys that just have one laborer, and now they're buying another flooring business and have a multi-million-dollar operation through working with me, which is crazy because like I'm 28. So you think the past 5 years I've been working with folks that are like more than double my age about how they should do business, which is a very weird sensation.
Because you think that the age has something to do with it.
Right. And that's a funny story with that. So part of our work is we also provided like a back-end marketing team, but we get started. There's this guy who's like 3 times older than me. Like he is old, electrician guy in Texas. And he's talking with me and my boss. This is very early on. I'm like 24. And so he's talking with me and he feels good about working with us. He's like, hey, Harley, you know what? You sound kind of young. How old are you? I'm like, well, tell you what, man, I'm just 24 years old. Hang up on the conference call. So Tim calls him back, which was my boss. And the guy's just like, man, Tim, I can't work with this guy. He's so freaking young. Like and so he was not a good fit. He left after a month, but it's, some of it's real where like you don't have the experience, but you're right. If you're educated, you're reading all the literature, getting trained up well enough, and you speak with confidence, then yeah, you can be a business coach for people and be just like 24, But anyways, where was I at? Getting back to the motivation for Get Better Bookkeeping this was one of the ideas of many business ideas. I talked with my brother, who's 12 years older, CEO of a second company, well-established in his career, giving him ideas. And he says, hey, actually, that bookkeeping idea you have, this is really good. I'm surprised you haven't done it yet. And furthermore, if you do decide to do it, I want to help make it easier for you. So just like 4 or 5 years of looking for that next open door, and this is like the most wide open thing I'd ever seen. So I talk with people, and they're all agreeing that I could figure it out, even though I had a marketing degree and wasn't being a bookkeeper accountant for 5 years. So I launched it at the beginning of the year and took a jump where I had stopped working at my previous place. And it's been 8 months, and things have been going really well. But it was to your original question about follow-up and losing track of the books. That's baked into how we do our work. So how we do it is one of our first priorities is we touch everyone's accounts every week. So instead of a lot of other bookkeeping accounting firms where they just look on monthly updating the details.
They wait 45 days after the first.
Sure. 45 days. Yeah.
30 days, whatever.
Just, Yeah. And I don't know all the specific reasons why that happens. But we want to touch everyone's accounts every week. Because if we really do that, even if a bookkeeper is managing 20 businesses at a time, they can get through all of them because they're touching it every week. So the piles of work is never going to get that big if you're really consistent every single week.
You're efficient.
Right. And what also helps us with that is the second reason is we require financial review meetings with folks every month that work with us. Because I saw with these business owners, the only
talk to them once a year.
Right.
Right after tax season. It's like, here's your taxes, sign here. And you're like, wait, I got questions.
Yeah. Oh, that'll be extra. You got questions.
Oh yeah, then that'll be extra. Yeah. You need a meeting. That'll be $1.50 an hour.
Yep.
And
whatever it is.
And so, like for the coaching, maybe the only time they look at these finances are in this coaching meeting that they feel obligated to go to because they're paying us buku's money, you know? And so many of them don't take the time to do that. And even though a lot of us like want to, there's so many other burning fires that we got. So many other problems with employees, customers being stupid, you know, suppliers not getting over there, like just everything.
Trucks rolling over, things catching on fire.
You bust a vehicle, got to get to the shop, everything about
Cats
that.
and dogs living together.
And yeah, well,
That's my house.
Cat Dog was Cat Dog was a great show.
That was a great show.
But anyways, so they have a hard time finding this time to do something that maybe they don't ever want to do, is look at finances of all the things, you know? Math sucks, right?
I bet you a lot of people are like, yeah, I barely passed in math.
I like math.
Yeah, there you go.
Math is a story you can't.
can't
Math tells a
misinterpret.
story. Yeah, right.
Yeah.
It's if you just understand it.
1 + 1 is 2. That's it.
I love numbers.
It's not 11. It's 2.
Right.
Has clear rules,
It's got clear rules.
which a lot of right now doesn't have clear rules.
Math.
Oh, math. Aren't they changing math? I heard about
Yeah,
this.
it's like new math. It's confusing as hell.
It's called algebra.
No. I passed that just fine.
But people are having a hard time looking at their finances. So part of our work is like, hey, just show up to a monthly meeting. We're doing the books, so we know it's accurate. So just sit with us, and we'll look at the stuff with you. I get to hear what's going on in the field for you. And then we can talk about ways to make enhancements based upon the facts of the business instead of just feelings. So when we talk about follow-up, you can make it where it's baked into your business, where like for them, if they're ever concerned about how we're doing, they're never going to wonder about that because they have a monthly meeting. Mm-hmm. So like if they show up and we're not doing our job, that's bad on us. Like we got obligations to show up and have accurate numbers for them.
It gives them an opportunity to communicate those questions or concerns
Right.
at the meeting. And they're like, hey, I have a question. Okay, but then that's what the monthly meeting's for. Like, that's why we do the monthly, which, I mean, we're supposed to.
I'm sorry, dude. I look over the numbers. It looks good
Yeah.
for the most part.
So we have monthly meetings. At minimum, we have semi-annual.
With
at
your
minimum.
Sooner Marketing Solutions company, right?
Correct, yeah,
Yes.
with the agency.
Uh-huh.
Semi-annual meetings or calls. They don't have to be in person, but at least if we had two this morning, and one of them was an hour and a half, and the other one was 10 minutes.
Wow.
And they're two completely different types of clientele.
Yeah.
But one was like, oh, cool, here's an update on some stuff, and thanks for some numbers, and okay, bye. And the next one was like, okay, we got to go through your emails, your website, your social media, your Google ads, your Facebook ads, your organic traffic. We got to figure out
how much that
what's
they're
happening
doing with you.
in October, what's happening in November. We need to
Nice.
work on our calendars. Like, there's a lot more that went into it. So that's why it lasted an hour and a half. But it's really good that we get those opportunities to have those. And I think it was, I don't know, it was probably 2-3 years ago. Next year will be my 10th year in business.
Hey,
But
cheers.
it's about 2 or
Good
3
job,
years
sir.
ago. Cheers.
Yep.
That'll be something that I implemented where I was like, we need to start having these conversations because we used to just do it once a year. And I'm like, that is not enough because they forget about it. We're not
Right.
sticky enough.
We're not sticky.
This is going to be a thing.
Yep.
We're not sticky. Question: are you sticky? Think about that throughout the podcast.
I mean, I'm trying to convince people to plant grass right now so I have something to mow in the winter. That's pretty sticky.
That's pretty sticky.
Planting
You know
grass.
what I was
you
just
want some
thinking?
green grass, Braden?
You know, I was thinking
about
about how you can be sticky. I do need some grass if you have any leftovers. But you could do plant tags. So like if a plant, maybe it's a warranty tag or something, I don't know. Or, Rainbird or irrigation systems. A lot of companies put stickers on them with their logo. Or HVAC companies will put it on the
You
furnace.
made those stickers for us. You don't remember that? I have those stickers that you
Garage
made
door
for us.
You still use them?
Yeah,
You still have some?
every single timer. Yep.
Awesome.
Garage door companies do that too.
Garage door companies,
Yeah.
because if you ever have a problem, you're not going to Google and finding somebody new.
No.
You're going to whoever installed it,
Right.
unless you hate them.
It's easier that
Yeah,
way
that's right.
usually.
Yeah.
Yeah.
So yeah, you bake it into the business that you follow up and keep people top of mind and make sure that they know how valuable your service is,
hmm
which can help you charge a premium and they still think it's worth it. So
I like that.
super long answer to that question, but there you go.
So, what are some common challenges that businesses have in the financial aspect? Is it acquiring capital? Is it just knowing where their money is going? Or like, what are some common issues or concerns that you hear that we're just like, and it's related to money?
Yeah. Well, the first one is for sure not even knowing what's going on, you know? So I can't tell you how many times we go through updating their books in a couple months, and then we have that first financial review, and they're like, "Oh, wow, so that's what's going on." Like, it's just, what? Are you kidding me? So there's that where just knowledge is power through that quote, so that you know that, oh, okay, well, this is how we should adjust things now because we know where the money's going, And then it goes even deeper where we look through each of the line items of transactions and people are like, wait, what the heck is that? What's that? So knowing what's going on is the first one. And then part of knowing what's going on is answering some of the deeper questions, like the nuances, like for instance, pricing is a big deal where a lot of people, like in fact, an electrician just this morning I met with, we had our first financial review meeting. And we're looking over details about his finances. We're showing how much is left over in his net. So if you think about profit and loss, you got your sales income, and then you have your cost of goods sold, all the expenses that have to do with implementing the work to get done. And then you have all the other overhead expenses. And then at the end is the net profit. So we're looking at the net, and we're looking at how low it is. Like, he is not really making money with his business. And he didn't have to see the numbers to see that. He knows his bank account's tight. He doesn't have a lot of cash flow. So I start, and a number of questions. In this first meeting, I have a financial operations audit where I ask a list of questions that almost always reveals at least one, if not a few revelations that they should be able to change something. And for this guy, it was his pricing. Because what he says when he prices out his jobs as an electrician, he says, well, I try and make sure that we at least get 20, if not 25% gross. And you raised your eyebrows.
That's bad.
Why'd you raise your eyebrows?
Did I understand that correctly?
Well, depending on what he's marking up, I mean, I guess if he's marking up gross, everything. But I mean, I know our pricing, I mentioned earlier, right?
Okay.
We calculate our overhead. We have a markup on our labor, right? Then we calculate our material, and we have our markup on material.
Yeah.
And then you have your markup over the whole job. So you have multiple markups throughout the whole particular job. So, for instance, we do like a markup on 40% of our material, which typically, if it's warranty work or like you want to have a warranty there, you mark up the plants even more. And then you have your labor, which we mark up, I forget the number, but I want to say it's like 40%, 40 to 50% of what it costs to run our business, our overhead costs, right? And then on top of that job, we're like, okay, now that job is paid for. Now we want to make X amount of profit on that job. Now you're saying he wants 25% over gross.
Yeah.
I mean,
so when you have gross, that means everything after the costs of doing the work.
It's
the hard costs.
Yes.
Like materials.
Yes.
That's not wages like W-2. That's overhead.
So a lot of our work, we actually stretch some of the definitions.
Okay.
So for cost of goods, what we do is if there are people that are working in the field, your landscapers, that are getting paid to actually implement the work, is that not a cost of the good that you're producing?
I mean, it's technically is, but that's not how it's organized in a standard P&L report.
Right.
Unless you force that, which you can in QuickBooks.
Yeah.
It's just a lot more time, just a lot more management.
But in my opinion, the way I approach it is I approach it in a way that business owners would best benefit from interpreting the details.
Absolutely. Now that you just said that makes complete sense.
So like in QuickBooks, you can pull a report based on how much like man hours and stuff like that per project. And you can actually know how much you're making on each client.
Right.
To see, okay, well on this client, man, they're eating it. like we're eating, they're eating our lunch or whatever the saying is, right? And so we need to change something about their service plan or whatever. You could look at another client and be like, oh my God, we're making 1,000% profit. I'm just kidding. But whatever. But you can kind of see like per project or per client on stuff. It's just so hard to manage. I haven't had the time.
Well, right. All of that nuanced detail is all time to track the details.
Yeah. Right. But I love where his mindset came from. You and I both read Profit First, right? And really what that book is, it's a mindset book. It's not a business book. It's a mindset book, right?
Yeah,
He just changed the mindset of payroll. Instead of it being payroll, it is a cost of goods sold. Because in sense, most businesses don't see that. Most business owners don't see that,
especially
right?
if you're a service-based business.
Exactly.
Yeah.
So then once you come into the cost of goods sold, then you can almost in your head, and again, I've thankfully gone past this, but most business owners haven't.
Mm-hmm.
They now can tie it together of why there should be a markup, why you need to charge. Because a lot of times I've seen in business owners in the service base is, well, I don't want to mark up my material because I feel like that's wrong. Well, I'm sorry, but it costs money to go get that material. It costs money to have that material on that truck. Every time you have that material on the truck, that's an extra 0.1 miles per gallon less. Like it all adds up.
And you're not being cheap by doing that. It doesn't mean that you're a cheapskate by like being like, no.
You're hurting the industry.
And you're hurting your business. You're hurting opportunities for the people in your business too.
Yeah. And here's a distinction I want to give to people is that what you just said is people feel like that's wrong. What we got to understand is that you can have all sorts of feelings about what you want to do or not do. But part of this work is showing people the facts.
Yep.
Like you can think that you should charge something, but part of pricing is you got to price out what you do so that you can just cover your costs, you know? And so for
and also like if you just price out to cover your cost, you're not in business.
No.
Right. Yeah.
Which a lot of people do. And
right.
they start a business and they'll go, well, oh yeah, this cost me this and I'm going to charge $50 to come out and take photos. All right. Well, that's a $3,000 camera. And I can only take so many photos before that thing needs replaced and only use it for so long.
Yep.
And then I also got to spend time editing. And then I got to have a software to be able to share that with you. What am I going to put it on a CD? But even then, that's a hard cost. What am I going to give you? Flash drives? Hard cost. Okay, maybe Google Drive. Still a hard cost, right? So like you got to calculate all those different things that goes into it. Sorry.
So anyways, for this electrician, he's setting himself up where after all of his costs, he's got 20% left. And what I know is that, look, if you at least want a 10% net on your work, that's not amazing, but it's something. And for a lot of people, they don't even have that. But if you want to get to like 15, 20% net for a healthy organization, if he's pricing himself where he has 20% left on gross, you got all the overhead expenses, insurance, paying yourself, fuel, and all these other details. Yeah. So what he found out in the meeting after looking at numbers, because he confessed he rarely ever does, and if he does, it's probably just like a glance, you know. He's like, oh, I'm even if I grow more, I'm just gonna still keep screwing myself over, you know. You said profit first. We're certified to implement profit first with people.
No way, that's pretty cool.
Yeah,
that's a great book. If you haven't read it, it's
have you talked with Mike or did you go through their course and stuff? Or?
I have sent him an email and he responded. But
he says in all his books, he says he will respond.
Yeah,
which is cool. I love all his books. Like I've the Pumpkin Plan, Clockwork, and then there's Clockwork 2. Have you read that one yet?
No, I've watched Clockwork Orange though.
Okay, yeah, and then I'm on Get Different, which is about marketing.
Yeah,
which that one's pretty cool. I'm working on that and Traction.
Nice.
But I've got to sleep sometimes. So take care of that new baby and everything too, man. It's a lot.
New baby? How old's your new one?
3 months.
Nice.
Yeah.
Okay, well,
did you know that the average agency profit margin, gross profit, let's put gross profit, is between 55 and 60%. And the net is about 20%, 23%.
Right. Well, that's
so
exactly
I know
what
my
he was saying.
numbers. So I know exactly how to price out my stuff.
Good.
And I also know, I mean, like anybody can price less than me. More power to them.
Right.
They're not going to be around.
Yeah.
Or if they're doing it, they better do it in volume and they better do it quick, and then they got to increase their price because their costs are also going to increase. And I also can't hire someone for $12 an hour in my space or 15. I can't.
Well, if I'm being honest, anywhere in this day and age, if you want to hire somebody that's actually decently qualified, you're not going to pay them.
And nor do I want
15.
to.
No.
Right.
Like if I want to find really badass people, some really good, skilled people that give a shit, people that want to like have a family or whatever it is, you got to pay them. And what does that look like? Well, here in the Tulsa market, the average income is $40,000, $38,000 is what I think it is. So if you're making 50 here at SMS, 45, I think we start at 43. So our starting, then we have a range between that and 50 right now. That's kind of like where we're starting. But I mean, like that all costs money. And then we're allocating that that role, that person is a resource, and how far can they go into whatever job that they're doing. So if it's social media, how many clients can you manage? Well, I know it's about 15 to 20, depending on whatever package is sold to those clients, to those clients, what package is sold is however much resource they can allocate.
That's a very similar standard with bookkeeping. 20 to 25 is the average that bookkeepers
Profit
should be
margin?
able to manage.
Yeah.
No, that bookkeepers can manage accounts.
Accounts. Okay. Yeah.
Bookkeeper.
And if I was like an account manager or babysitter, to do it well is about 25 to 30.
Yeah. Yeah, when you get past 30 into 40, it gets
you start
a little,
losing track. You can't follow up with people.
Yeah,
So a lot of people in my space, a lot of companies, whenever they have these babysitters, these account managers, they are overstuffed with clients to manage. They're managing 100 clients.
Same with bookkeepers that work in accounting firms. Yeah. Yep. Same case.
So I kind of have a double-edged question here. Okay. So you just mentioned, we're mentioning how many people you can manage per person, right? Per bookkeeper, per accounts manager, same situation. And you mentioned that the problem, which I've also seen it, we've all seen it, right? Where people take on too much work and then they end up the bookkeeper you don't want to be, the marketing guy you don't want to be.
Which, by the way, your company has the same thing.
Right.
How many lawns your crew can cut.
Exactly.
Yep.
Exactly. The landscape company I don't want to be, right?
Uh-huh.
Oh, yeah, we can get to the world, and then the world all gets pissed off and has to find somebody else, right? Because we can't get there. But I think this popped into my head, the realization that I feel like, Braden, you're great at it. I like to think I've been great at it. And from our conversation so far, Harley, you're great at it.
Okay.
He's like, okay.
Can you help someone understand? Because I feel like I notice it. Can you tell in your numbers when it's time to grow? Can you tell in your numbers when it's time to hire someone else?
Yes.
Because
I love that question. How do you know when it's time? How do you know when you can hire?
Right, because
you need to hire, but how do you know that you financially can?
But the reason I say this is because I've experienced it. I'm sure we've all experienced it, right? You have an increase of customers and you're like, oh it's great, right? But then you start failing, right? You can only manage so much. Like there's literally only so much you can manage, right? I've seen it 100%. You can reflect that shit in your business like that. I mean, you could see where you start to dwindle. So I'm curious, at least I've had that opinion as a bookkeeper. What do you see, and how do you see that? We're like, okay, this is great, but you've hit that threshold where it's time to grow. What does that look like?
Yeah, well, you said as a bookkeeper, and I do want to specify something that at Get Better Bookkeeping, part of the fact of being better is the fact that as bookkeepers, we're not just crunching numbers and giving you reports. We are being almost as if a small business could have a CFO.
Okay.
So you're not just reconciling.
Right.
Matching transactions.
Yeah.
Because that's what everyone thinks as a bookkeeper. You're like, oh, yeah, you're just making sure the bank matches the books. And you're done. Here's $100 a month. Shut up. Talk to you next year.
Yeah.
Just autopilot.
It's a ton. It's a ton more than that. Yeah, that we're trying to do. So, but okay. When do you find the right when do you think it's time to get the next person? Okay, I've done this with a few of my folks this year. So, first of all, knowing what's going on is the first thing, and there's part of knowing what's going on where one of the first activities I do is I tally up and make an average of what the typical monthly cost is to do your business based upon what your fixed expenses are, based upon what your average expenses are, where, yes, fuel is not the same every month, but over 8 months, you can get an average,
Way too much.
And yeah.
Especially it's like $3.80 a gallon right now.
Yeah. That's ridiculous.
Where you can give yourself a monthly average amount that says, hey, for your business, you got to make sure you collect this much a month for your work. And knowing that number answers a lot of questions for business owners, And part of that question is, can we bring someone else on? Well, if you are, first of all, knowing when to bring someone else on, people also need to be aware that just because you're paying someone $50,000 a year, that cost is actually more like $65,000 a year. Because of payroll taxes, right?
And workers' comp.
And workers' comp, yep. And all those kinds of extra things.
And their uniforms.
Sure.
Their health insurance, life insurance, 401k, dental, vision.
Yeah.
We could keep going.
If you do all that stuff, you know?
Yeah. Which to be a competitive company, you kind of have to. At some point you have to find good. In order to find good people, you need to offer certain benefits.
So you say, okay, if my monthly number is 50 grand, and I know that if I need to hire someone, I'm gonna spend $5,000 a month to get someone in the team. Okay. Well, then from there, it's kind of just math, If you want to get someone on and know that you can cover their costs, well, when you get, let's say you change that 50 grand a month to 60 grand a month, you think, oh, well, yeah, I got plenty of room to be able to get this employee on. Well, the sale of 10 grand more boils down to a lot of different costs, remember? So if you're like my electrician, where he sells 10 grand, 80% of that's gone, you got 2 grand to work with, and yeah, you're not getting a new person. You need to get 20, 30 grand more in order to get a new person on board. And so that's
a hard stretch, though. Let's say if you're doing 50 grand and you tell me, you go, Braden, you guys need to do 80,000 in order to bring on a new person. I go, how are we going to do another 60%, 70% more, 60% more? Yeah, roughly.
Mm-hmm.
With that kind of workload, I don't have the resources to be able to allocate to that personally or with anybody else on my team.
Well, you might not have the infrastructure to handle that either, though.
So you've got to sacrifice. You got to sacrifice somewhere. You either got to have the financial stability in your account, and so like in the profit first, I believe it's profit first. He goes, you should have 6 months of their salary before you hire somebody new in the bank, sitting untouched, not in your checking, but like in a rainy day account.
And I would say that's a very aggressive savings plan for having someone on board. 6 months. That's like, if you have 6 months available to bring someone on board, that's super nice.
Oh yeah.
Yeah.
I feel like
most people don't have 2 weeks.
Absolutely.
Yeah.
But at the same time, you think about it, and I don't know, this is playing devil's advocate. If you have 6 months worth of their salary sitting in a savings account, you're 6 months late to hiring them, in my opinion, because you had 6 months to save that money. If that person's going to make you money, you had 6 months.
You're racing against the clock at that point. You're almost taking a risk. So especially if you're in that limbo, right? So we're not talking about a $15 million business who can more or less take a risk on new employees every day. Right. If they lose an employee, it may hurt a little bit, but we can find somebody new. It's not a big deal. But if you're doing $50,000 a month, if you lose an employee, that's a big deal. Like, they are such key players at that stage in business because you're not even doing $1 million a year.
So
you know what I mean?
Let's bring this down. I'm talking about how you figure this out. Let's bring it down to a simple number, because this is what I like too. When I talk with folks, you need to have like one number that you focus on in order to just have as your goal. So for me, I'm hiring and looking for people because whenever I'm at 38 clients after 8 months. And whenever I get to 45, which I think is realistic by October, I have calculated the math where when we have 45 clients, and the benefit with us, it's a monthly subscription working with us. So that money is going to keep coming every month. So I know that, hey, whenever I get to 45, I can pull the trigger on a bookkeeper. So what business owners should do is when they break down the math, they make it into a really simple number that they can digest. So like, how many more lawns on average does your team need to be able to mow in order to start building another crew? How many more clients do you need on a monthly basis to get another SEO guy? If you do SEO, I don't know.
Oh yeah.
Yeah, there you go. Okay.
I mow lawns, but hopefully not for long.
Yeah.
You mow lawns?
I don't. My guys do.
You want to stay tan.
I mow my yard and my neighbor's.
That doesn't count.
You mow your own
I
yard.
mow lawns.
Yeah, I mow my own yard. My guys don't do a good enough job.
You probably don't want to hire anyone else.
You don't
either.
even have a front lawn, first of all you have is a back lawn.
Okay, but
you could weed eat in your front yard.
I could. But the reality is, it's funny. I actually went out of town, and this is, I had a business owner tell me once that if you want to build a successful business, you have to have standards, right?
Sure.
And that's what builds your culture in your company.
Okay.
But you also have to be okay with sucking at a lot of things. And I'm like, well, what do you mean? He's like, we have to understand that your guys will never care as much or your company as much as you do.
Mm-hmm.
So a couple of weeks ago, maybe a month ago, I had my guys mow my yard and my neighbor's yard. I came back from vacation or wherever I was, and the yards looked good. I mean, they looked fine. They were mowed, looked pretty, whatever. But as soon as I actually got up the next morning, I texted my neighbor. I said, hey, man, sorry about the yard. I'll get it fixed next week. And he's like, what are you talking about? The yard looks great. I'm like, no, it doesn't. And nonetheless, they did a great job. They just didn't they should have mowed it half an inch lower. That's literally what the difference was. So, yes, I mow my own yard because I know how I like it. And I mow the neighbor's yard because I like to make sure all the neighbors know that I mow his yard too. And that's just the way it is.
Are you neighborly? Like, you know all your neighbors?
Most of my neighbors, yeah.
Oh, wow.
Yeah.
Yeah, me too.
If I'm being honest,
I had a neighbor the other day that was like 6 doors down. They were taking care of their lawn or whatever, and I was out. I went out to my truck and came back, and they stopped, looked at me down, and was like, him and his wife, and I was like, ah.
Yeah, so I'm not sure.
Welcome to the South.
I'm like neighborly. I've lived there for 3 years. I've never talked to any one of my neighbors longer than maybe 15 minutes.
Dude, I'm so much worse than you.
Yeah,
I talk to no one.
but my next door neighbor right next to me, a few years ago, my truck got broken into, and he had cameras, and the cops were like, hey, if you'll talk to your neighbor. And then I talked to the guy, and he's like, oh, dude, I'm on the council. I'm like, oh, dude, you're the great guy. I didn't even know you. You know, you're on the council. You keep an eye over my house. This is great. So I kind of got to know him, but I don't really talk to him much. He's much older. And then the guy across the yard, he's like, man, I just like your yard. It looks great. Can you mow my yard? And I literally talk to him for 30 seconds every 2 weeks. He comes and pays me. And he's like, hey, man, love the yard. And that's that. And then a couple other neighbors, like I kind of know them, but frankly, I kind of like to be left alone. So I leave people alone.
Yeah.
You know, I'm not the guy that's going to come in, hey, I'm your new next door neighbor. Here's some cookies. No. But
my neighbors were all like that to me when we moved.
Yeah, no.
I had my neighbors will come
But look
up
at the
and they're
neighborhood
like,
you live in.
welcome in. You guys are great. You know, we're so-and-so. This is Kathy. Like,
yeah, I think it's
Yeah.
perspective of the neighborhood you live in for sure, because obviously my neighborhood's like old.
Well, what
you
part
know.
of town are you in?
I live in Sepulpa.
Okay.
So I live,
Yeah.
right, it's older. Most of these people live there 15, 20 years.
Uh-huh.
And frankly, most of these people are like, there's so many people.
And then what are you over by Brookside or something?
Bixby.
Bixby? Yeah, that's
It's the
nice
Joneses,
area.
dude.
That's a
Everybody's
nice
competing.
area.
It's right.
Yeah.
It's just a reality.
And even when I lived over in Jinx, it was kind of that way too.
Yeah.
Mhm.
Well, it's just that part of town. And again,
South Tulsa.
Yeah, there's nothing
Yes.
wrong with that. Honestly, I love South Tulsa.
Right?
Hey, man. Hey, it's a great
Whatever
part
that
of town.
what's it, flick the nose or swipe? No, it's not swipe. That's something that's flick, right? The
It is
snobby.
flicking,
It's the
yes.
snob. It's
I don't
upward,
know. I don't know.
right? And then the motion's like, hey, if you're snobby, it's like my Starbucks drink. Is that what it is?
I don't know.
Is that
but
just me right now? Okay,
Yeah.
fine, forget it. Move on. Okay, so we're just about our 12-minute warning here. To we're
What?
about an hour in. I know.
12-minute warning? What
Yep.
is?
So we have. How do you interpret a profit and loss report?
How do you interpret
What does all this mean?
it? Well,
How do you go from the top bottom? So I see I have income,
yes.
gross profit,
Mm-hmm.
total expenses, and net income.
Mm-hmm.
What does all this stuff mean?
Well, okay.
Dumb it down.
Sure. So your top of the profit and loss is the income, right? That's supposed to represent all of what you sold to people, you know? Now, there's two ways that you do it, where the common accounting way is accrual, where the main rule with that, I think there's some other details with it, I'm sure, but the main rule with accrual is that it shows up on the income section if it's an invoice you sent out. It doesn't mean if you actually collected cash. So a lot of small business owners, they actually...
I don't like accrual. I like cash.
So a lot of small business owners use it cash basis, yeah, with their accounting. Because when it shows up on the income, that's when you received it,
Right.
you know? It's the bigger companies that will have a cash flow statement. That's a separate accounting statement that represents the movement of cash. But you got the income at the top, and then the first expense on there should be cost of goods sold. For your business, it might not be there for your business.
Yeah. So like on mine, I have income, and then I have different sources of income.
Sure. Which that's
so
it.
so
Which,
I have so we get like we're affiliates of stuff, so we get like Adobe stock income.
Yeah.
We get commission from hosting companies.
Uh-huh.
We have discounts on here. That's
So
in the income.
So that's a good
We
income.
have it's an Etsy shop.
So that's a nicer income. That's a nicer profit and loss statement because you do have separate sections that show where income is coming from. A lot of businesses, if they're just doing a very simple bookkeeping,
They just do sales.
services, their sales. Yeah, and that's it. That doesn't really tell you, like, for instance, oh, we should probably focus on that service more. You know, you could get even more
Or
detailed.
we should cut that service.
Right.
Because like maybe that service is a pain in the ass, like going out and spraying lawns or whatever it is,
That's
right?
easy. It's the mowing that's a pain in the ass.
Yeah, cut the mowing.
Cut your own yard, Braden.
Okay, cool. So we've got total income, and it's a good idea to kind of divide that up between service lines.
Yes.
So then we can know, okay, and this is something that I when I worked with On Call years ago, it was I was digging them I was asking questions. I was like, how much revenue are we making from residential dumpsters and 15-yard dumpsters from residential customers?
Mm-hmm.
Because you're hounding me about like whatever this ad is for that particular product.
Mm-hmm.
And I'm like, if you cannot provide me with that data, you have to fix it. I don't know the answer. I can't help you.
Uh-huh.
And then I was like, tell me how much we're getting from commercial clients. Tell me how much we're getting from these commercial service lines.
Mm-hmm.
And I was like, then we can build out campaigns and do marketing for those specific service lines and then work on proving an ROI.
Yep.
But I can't help you in the mean sense. If you don't have Get Better Bookkeeping.
That's right. Yeah.
Okay. So cool.
All right. So then you go to cost of goods sold, which will typically have materials, supplies that you purchase for construction companies, materials to build what you build. And then subcontractors are typically in there as well. But again, you can stretch this definition in order to benefit you as the business owner and interpreting it. So that if you've got people that are working to produce the goods, you can separate them and put them in the cost of goods and then have the other administrative people in overhead expenses, you know? So that composes cost of goods, the cost of actually doing the work. You take the income total, subtract the cost of goods, that gets you the gross profit. But the gross profit, it's gross because it's not actually your profit. So you got all the overhead.
I'm looking at this like, damn.
Got all the overhead
Look at
expenses.
that.
Yeah. Overhead expenses that are things that most of the time you need to do the work that you do.
And these are things like advertising,
Yes.
Fuel,
bank charges or processing fees,
insurance,
right? Cell
Get Better
phones,
Bookkeeping.
Uh-huh.
dues and subscriptions,
Uh-huh.
insurance,
Sure.
interest, IT and internet, legal and professional, licenses and permits.
What are you, an ASMR podcast?
Yeah,
now?
meals and
Reading
entertainment,
things?
right? Travel and uniforms. List goes on.
Sure.
You could have as many chart of accounts as you need.
Yes. In fact, one of the things we help folks is sometimes they come in with hundreds upon hundreds of categories that they throw expenses into. And part of our work is actually we simplify that to like, look, if you got too many things to classify stuff, then that's like, you are making this way more complicated than it should be.
Because if you want to know how much you spend on this particular vendor for whatever it is, then you can just pull a report for that vendor.
Sure. Yep. Yeah. But if you want to like more straightforward interpret over like bird's eye view, profit and loss, you know, cut down on all that fluff. You don't need all that noise, you know? But anyways, yeah, you look at all the expenses, and for certain industries or different standards, there's percentage ratios. So like for construction companies or any contractors, I was trained that you typically think of it as thirds. You've got a third of what you get from a client to compensate labor. And so 33% of what you sell goes to labor. Another third goes to materials and anything that you use to actually get it done. And a lot of those are mixed up. Like some people are way more expensive on the materials just because it's a really expensive good. But at the end of the day, you would like to have 2/3 of everything you sell going to the costs of getting it done. So therefore, you got 33% left of what you sold to take care of overhead. So as long as you don't go crazy with overhead, you're able to actually have a decent net profit at the end of the day. So yeah, I mean, if you're looking to interpret your financial statements better, there's a lot of details we've already talked about. You could also just contact us at Get Better Bookkeeping. We'll help you out with that. But yeah, that's the typical order of a profit and loss statement.
So those are what you typically would have as called overhead.
Yes.
Okay. And then you have your net operating income.
Mm-hmm.
And then you have other expenses and other income, which that's more miscellaneous. That should technically be categorized.
It should. So one of those is the employee retention credit is huge right now.
Oh my God, yes.
So
shit. Do you get phone calls about that?
Only about 7 a day.
Yeah.
And you know what?
You're ERC. Contact us today.
Yes.
You know
Hurry,
what?
call us
So-
back.
We just got a letter from the bank that gave us the PPP loan,
Uh-huh.
and it's the first time I actually called to wonder what the hell they're talking about. I've
What-
got
what's
so
about
many
it?
phone calls,
Did-
but we got a PPP loan through Mabry Bank.
Mm-hmm.
We just got a letter from Mabry Bank saying, "Hey, you should apply for the ERC. Here's the details. Blah 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 blah."
You probably should.
And now I got a conversation on Tuesday about it, but up until now, it's just dude, it's so annoying. So many phone calls you get, but whenever you get a letter from the bank that gave you the PPP loan that forgave it, I'm like, okay, well, you guys might know something.
Yeah. So I point out that as an example because in the other income section, that's actually where you put that. Is the ERC.
yeah, those are more
funding.
miscellaneous, one time,
Mhm.
once a year things, something that's random that's in or out.
Because you
Yeah.
don't want it to be part of income. Because the
Because it
income
doesn't
section,
count. Yeah,
well,
services.
it's not part of what you're actually doing.
So let me ask you this. What you're saying is our actual income should be, in my perspective, landscaping, irrigation, drainage, that stuff, where we're actually doing that. But if I sell a truck, it needs to go into the other income.
So that's a whole different thing. You sell a truck, you're going to the balance sheet.
Okay.
So for
Oh, yeah.
people,
What the hell is a balance sheet?
yeah. He's winking at each other. They're not watching. It's like they're hosts.
Do you feel left out?
But a balance sheet is one way I heard it explained is you can see it as your you remember your GPA from school, grade point average.
Fuck that shit.
Not really.
Yeah, right. So you forgot
Bunch
about
of
that.
crap.
But so
Not real.
a GPA is
Not real.
it's
funny.
it's the cumulative grade score of how you did over time in school.
Right.
That's what a balance sheet is.
Oh, okay.
It's over the accumulation of your business.
Uh-huh.
The balance sheet represents how valuable your business is.
Okay.
Oh, okay. So give me give me a number and tell me what it's valuable at.
Sorry?
What you said it's the value of the business.
Yeah.
So if it's
Well-
$100,000 positive or negative, what does that mean?
Well, so that's
Does that mean like what it's worth?
well, hold on. So there's the name is a balance sheet, right?
Right.
So the whole point of it is that with all of the assets and the valuable things that you have in the business, cash, trucks, everything like that, it has to balance with whatever the liabilities are. That's why it's called a balance sheet. But to your example, you said, hey, what if I sell a truck?
Mhm.
Well, yeah, you're not in the business of selling trucks, right? So when you sell a truck, what you're doing is you have that truck as an asset in your business,
Mhm.
unless you don't have it fully. Well, I mean, so you would have the truck as an asset of what it's valuable, and then if you have a loan on it, it would be a liability that would go down over time with the payments.
So
you
for,
know?
so for
But
ease,
anyways,
ease of conversation,
yeah,
this
let
truck's
me-
paid off.
Yeah,
Right,
yeah.
right.
You pay it off, you sell it. So you subtract, get the asset off of, you subtract the worth of the truck, and then you add cash, and that way it balances out.
Okay.
But that's something that would be shown up on the balance sheet, which is something that people don't understand is that a profit and loss is, there's a reason why there's 4 different statements in accounting.
Mm-hmm.
And the next best one that you have to look at is the
there's
balance sheet.
4. There's more than profit and loss and balance sheet.
Yes. There's a cash flow statement and there's a statement of retained earnings, which again, the cash flow statement and the statement of retained earnings are rarely ever used in small businesses.
What?
Um,
Where is that report? I don't see it.
what are you on your QuickBooks right now?
Yeah.
Oh, okay.
I see my statement of cash flows.
Uh-huh.
Is that one?
That is one.
It's probably not going to
And
be
then
accurate though.
Statement of retained earnings. But anyways,
Yeah, it's
so
probably not accurate.
uh,
But I don't see the other
there-
one. I want to know where it is.
the reason why you don't just look at a profit and loss statement, because there's some things that don't show up on there that you could see as costs in the business. Like, for instance, business owners oftentimes are not employees in their business. So they're not given a salary, right?
Poor guys.
So, well, what they do is they take
If
distributions.
they're an S corp, they're supposed to be.
They're supposed to be, but a lot of businesses are not S corps. So they take distributions from the business as their compensation because they got to pay off their own bills, right? Money's got to come from somewhere. So when you give yourself $3,000 to take care of a hefty mortgage, or other bills, you're not going to see that expense on the profit and loss.
Oh, it's almost like it doesn't exist. It's like, where did that money go?
Well, that
until
money,
until you go to another report and
you
go, oh.
So you go to the balance sheet and you see that the $3,000 in cash went down and the $3,000 added to your owner's distributions.
Right. That's where I've seen that. Okay. So what if your owner's distribution is negative?
Then that means you have put in more money into the business than it's actually given you.
Is your negative, right?
Mm-hmm.
Oh, dude, I got to help you out with that.
Owes me money.
Oh, man.
Yeah, it owes you money.
It used to owe me a lot, but it's paid up.
Which is very typical. Yeah.
Very typical.
But yeah, so with the profit and loss, that's why I like to steer people toward having an S corp, because when you don't have that and you give yourself consistent income, like there's a painting company I work with.
You also save money by typically an S corporation, a single member LLC S corp will save more money on their taxes than being a C corp or just a standard LLC.
Yeah, there's certain like pros and cons with that. But anyways, so like I work with a painting company and they have a habit of taking out money all the time for themselves. And so what happens is
I had that habit.
Like, man, we made some money.
Well,
ching ching.
Yeah, that's what they think, because they look at a profit and loss and they see that at the end of the year
they go, we made $20,000.
They made well, yeah, it's even higher. They made $60,000 over the whole year. But I'm like, you always feel like you're cash tight though. So what's happening? And what's happening is I go to the balance sheet and I see owners' distributions and they're taking out like $60,000 over the whole year to pay for their own bills. So even though the profit and loss says that they're profiting,
they're actually zeroed
they're
out.
actually breaking even.
Mm-hmm.
And a lot of times losing money without knowing it.
See, I feel like more people knew about this. This whole conversation over the last hour, I want to nerd out so bad on some of this, and I want to be like, I've got questions. What about this? How does this work? Or which report should we look at? You know what I mean? Like, because I feel like you really start to understand how the business works, and you start transition to more into the business owner mindset. Because especially for those who are just starting out, like, sorry, but you're not a business owner. You're an employee, and you're an employee for a long time until you can build a team that allows you to slowly start stepping into the owner role. Like you and I we're employees,
we know,
but we're still owners, right? But we have opportunities to slowly start stepping back and looking at the business and go, what is happening on the financial level? Because I didn't go into business to be a nonprofit. And if I did, I would be a nonprofit. Right. I'm in business for profit.
Well, what's annoying about accountants and bookkeepers that I've found from the responses from clients coming to us is accountants have been to school for a long time. They get certified. They are smart as crap, and then they aren't really willing to have meetings with folks because they get charged like $250 an hour, for their work. And so a lot of the responses we get from folks is like, hey, you guys are willing to like just sit with me, even though I feel like I'm dumb, and just like educate me about this stuff. Because people think that, an accountant or bookkeeper will be able to educate me on this. But a lot of them don't take that time to just sit with them and understand their world. And I feel like I was given, without knowing it, a slight advantage in this, because again, I'm thinking of this in the business owner's mind. Because you can have great bookkeeping, but if you're not taking a look at it and using it to benefit your business, those facts, then it's tracking for nothing.
I think it overwhelms a lot of people because they don't know how to interpret it.
Right.
They don't know what all the gibberish means. They don't know what a balance sheet is.
But that's because most people aren't Harley. Most bookkeepers, most CPAs don't take the time to teach their people what it is they're actually,
or at least have the monthly meetings,
and that's
quarterly
what he's doing.
meetings. Like I want to talk to you more than once a year. Like
Yeah,
at tax
ideally.
time, like what I said earlier, I was like, "Here's your tax report. Sign it and good luck."
And
know,
you
it's like,
should
no,
have a meeting
like,
with your accountant a couple times a year, because what a good accountant will do. Again, let's also distinguish. I'm a bookkeeper, so
which is different.
Which is different.
Which is different than
Yes.
a CPA.
Yes.
CPA basically gives them the ability to represent you in an audit and some other stuff.
Sure, and they also take on the liability of filing correct taxes based upon the numbers that a bookkeeper gives them. So, but whenever you meet with an accountant, you should, because a good one will give you a projection of like, hey, this is how you're doing so far, like in the middle of the year. If you kept this up, this is about what you would owe in your
See,
taxes.
I want that's one thing I've asked my accountant. I'm like, I just sit down with me just for 30 minutes to an hour, and I want you to help me understand what is going through the books and help me assume what my tax liability is for 2023.
Yeah.
Because I'm prepping for whatever the percent is, and I have X amount in my bank. Do I need to work on trying to allocate more, the same, less? Am I fine? What do you think? And especially like with having a baby or getting married or buying and selling property, like some of those big life-changing things, or business, even if it's property and business, like that changes your tax liabilities. So I feel like you need to be having those twice a year.
Yes, do that twice a year, middle of the year, and then right, I would say middle of the year,
Like Christmas,
January,
January,
yeah, like
October.
at the end of the year, December, to be like, hey, okay, well, let's start putting more in your 401k, or let's start doing this, to help out with those tax credit.
Do you think a lot of
details.
these like CPA or accounting or bookkeeping firms, do you think they spread themselves too thin, or do you think that they're just so inefficient that they just don't do this?
Okay, so
And we're coming up on time, so
well, at least for me, I'm just waiting on my wife to get here with my kid, so I can talk until then. But you got, I was explained recently that the bookkeeping industry, accounting industry is like a triangle, where at the base you got a lot of people that are just like one person that does a few people's books, and then they get really content, and they're like, oh, well, I'm an introvert. I don't want to market myself to get more clients. That's
because they're very
uncomfortable.
analytical,
Yeah,
celebrating.
right. So they get comfortable there. That's why a lot of bookkeepers are just that level. And if they get 10 clients and they're making 6 figures, that's crazy to them, which is mind-boggling to me, because I'm like, we're going to do way more than that in the first year. What? But then, anyways, you get up the scale, and it's a smaller crop of people that are accountants, bookkeepers. And in those larger crews, yes, they do spread the work too thin. They do have a problem on managing their time of what's realistic with work. And, on top of that, a lot of them, they're not charging as much as they should, because if you really want to support enough people to give them a realistic amount of clients to work with at a time, that comes at a price. And you mentioned the book Be Different by Mike Michalowicz. There's a lot of similar books like Purple Cow by Seth Godin, where you're not making yourself different enough or stand out enough or valuable enough to be charging the kind of fees that you should. I think you're right on some level. I mean, there's probably not a lot of accountants that are going to wear a cheetah shirt. So
It's badass.
I like it.
Dig it.
I would never rock it, but I like it.
it's fun. Yeah.
I don't.
Not my
I don't
style.
think you could pull it off.
You see what I wear
Oh,
every
you
day,
could
dude.
pull it off.
I think I've worn this for the past year episodes,
I would pay to see you in that cheetah shirt,
dude.
You could pull it off. This is super cheap. This is like Shein for like $10 or something.
See, I mean,
Yeah.
I'd want to try, but then I'd be like, well, I have to work. I'm gonna take off my nice shirt. It's
Okay,
too much.
so you guys are listening and tuning in. You guys need to work on trying to change your business's financial future. Look at your balance sheet. Look at your profit and loss reports. Look at some of the other reports. Find a good bookkeeper. Find a good accountant, CPA, a firm. All three? Try to find one of each. Find a good bookkeeper first.
Yeah, find a good bookkeeper first.
Find someone that can understand how.
Because that's supposed to be a more recurring relationship over the year. Is a bookkeeper supposed to at least get things up to date every month?
Okay. Yeah.
And so they would hopefully be helping give you reports every month about how things are going. That's a more recurring relationship. And then, before tax time, I'd say even now, because, yes, there's actually 2 tax deadlines. And for the extension, that's happening like next week for that deadline. So like after that, when it gets to October, November, start looking for folks because they should be available to talk to you. And if they're not and they're being stingy with their time, go with someone else. I mean, like you want someone that's willing to just sit with you, and they're out there. But but yeah, you want an accountant and a bookkeeper to help you out. So.
Okay.
And you could choose Get Better Bookkeeping to do the bookkeeping services.
So I was going to ask how if someone needs help with their bookkeeping and you are local here to Tulsa, right?
We work nationwide, actually.
So you have the capabilities to work nationwide. If someone needs to get a hold of you,
yep.
How do they do that?
So you can just go to Google, Get Better Bookkeeping, look at our reviews, get a hold of us. You can also go to getbetterbookkeeping.com, give us a call, fill out a form. We'll do a couple different calls. One of them is a deep dive call to really help assess all the needs you have and talk through some of those details that we can provide to you. And we'll get you on board and it'll be great. So
fantastic.
Love it.
You have anything else?
No, man, that was awesome.
All right. Well, Harley, we really appreciate you coming in to be our guest here on Brews Business.
Absolutely.
And making it here in person. It means a lot to us. And
sure.
I hope that everyone else that's tuning in is able to really kind of grasp a little bit more and understand a little bit more into this. And we really appreciate all of our listeners for tuning in today. If you guys have any questions, go ahead and email us or make a video or send us a message on social media. If you're enjoying the comment, we'd love to see your support. And so please give us a like, a subscribe, leave us a review. It really means the world to all of us and it helps other people find us. We're curious to hear from you. So if you've got ideas on things you want to hear, maybe parts 2 of this episode or others, again, let us know. Tag us in Brews in Biz on social media with topics you'd love for us to cover. And I guess until then, cheers and happy brewing.
That's correct.
Later, guys.
See
you in
ya.
2 weeks.